My name is David Siddons. I'm president of the David Siddons Group, and this is Ana Bozovic. We are real estate analysts and agents, and now we're going to look back at the last 6 months of COVID. So I've known Ana, just so the audience knows, I've known Ana for many years now, and we're kind of cut from the same cloth. We both sell real estate, but more importantly, we analyze it. And we're both very unfiltered in our opinions.
No filter here. Get ready, everyone.
Yeah. So, which is nice because look, I know if you go out there and you watch certain bits of information, you're going to get a very kumbaya, all is wonderful angle. The reality is that not everything is great. But that's okay. And that doesn't mean you shouldn't buy. And I think that's probably one of the first things to say. Just because we highlight, certain markets which have lots of inventory or some of the issues we're dealing with, doesn't mean that we're all going to hell in a handbasket. I think there's actually a lot of opportunity right now.
Correct.
And so we're going to look at that. The first question I'm going to have with you, and both being economists, actually, you have a master's in math and physics from Columbia. I have my degree in economics. Let's look at the macro and then let's go down to micro of the market and discuss what we're actually seeing specifically in Miami and the submarkets of Miami.
Yeah, great point. I'm glad you said that because the macro very much drives the micro and no market lives in a vacuum. So it's very important to put things in context.
One of the reasons you're probably watching is you're thinking to yourself, what's going on in the Miami real estate market? And you might be a relocation, you might be looking for a second home, and you're just trying to get some better optics, clearer analysis on what's really happening. And I know that what's been happening outside of Miami, whether it's New York or Chicago, San Francisco, DC, these other big, cities, urban cores, we're not all experiencing the same kind of behavior across the country. Yeah. And it kind of feels like we're a bit of an island sometimes.
In many ways
being
we are.
in South Florida.
In many ways we are.
So looking at these behaviors in the last 6 months, talk us through what we've been seeing as the numbers as a whole, as you see it.
Sure. So starting just macro, we have this event. We have the coronavirus, which is very much, it's a black swan event. It's something that nobody could have predicted. It's come, it's here with us. We don't quite know how long, and that's part of the point. It's a period of what we can call radical uncertainty. And in many ways, Corona is accelerating trends that were already in place. Good trends, not so good trends, they're all being accelerated and amplified by Corona. Yeah. And we're seeing that play out very clearly in the numbers here in South Florida real estate.
Yeah, I love that. And I've heard that before, that, you've said that acceleration of trends. And it's interesting because what we're seeing in the last 6 months didn't just come out of nowhere. No. It's not like we just suddenly found ourselves with a full, 180-degree movement change from patterns. We had behavioral patterns already in place across the condo market and the housing market all the way back to 2014, 15.
Yeah, it's the market cycle. It does this.
It's as all market cycles do.
Correct. The stock market, the housing market.
Yeah, and we talk about real estate much more like an asset class than just, in the real estate language. We speak more as analysts and economists than we do as just realtors. And when we look back and we both plot our own, and we've been doing each other's, I've been reading your reports for a while, you've probably been seeing mine for a while. We do look at the behaviors, and when we look at the patterns back even down as far as 2015, 16, 17, 18, 19, into 20, we're dealing with things like, let's talk about the condo market. The condo market has many obviously different neighborhoods and there's many different price points, but the condo market as a whole is not all sunshine and roses.
No, it's been experiencing as a whole transaction volume decline since 2013.
Yeah.
And that was reality before Corona. So before Corona hit, we had record high levels of inventory or high absorption rate, as you'll call it. Some markets worse than others, but none of them were great. And the reason for that is the higher up you go in price in the condo market, the more reliant you are upon destination or outside money, and the more those purchases are discretionary. So for the condo market, the more it tapped into the local working population, it was relatively okay. The more it relied upon outside money, that has been decreasing in flow and it was in trouble. And there's no way to sugarcoat that. We had markets where 1 million plus even had almost 100 months of inventory. The numbers were so bad it looked made up leading into it.
That's true, because we were talking on the phone earlier before we did this video, and we been punching narrative back and forth to each other. And one of the things that we were looking at was there are specific neighborhoods which have got themselves more into trouble than others.
Oh, yeah.
And I don't like to generalize and say, hey, you should all be running for the hills, because we've got, I mean, the market that we talked about is we have the urban core market on the mainland. We've got Brickell, Downtown and Edgewater, where we've had a lot of construction, ton of construction over the last 7 years. And supply-demand economics rules that if you have that much product and you don't have enough people to absorb it, you're going to be in a correctional basis. On top of that, you've then got those people that were renting out, and those rental numbers, of course, can only go so high because people's incomes will only allow them to spend so much on rent. So when the prices of the condos got out of whack with the income levels, again, another storm cloud on the horizon. When we went north into sunny Isles,
our poster child of
excess. So sunny Isles is an interesting market because when we spend as much time running the numbers, we also spend an equal amount of time actually selling real estate and being on the ground, being in the weeds, so to speak. We understand the human behavior, and we understand the chatter and the noise and why people do what they do. And we also understand the demographic profile, which is so much of it. So when you analyze from afar, you don't always pick this up. But that market obviously was driven by a lot of, foreign investors and foreign money and currency exchanges and other dynamics such as, green cards and immigration, all these other things will affect and have affected those markets. Ultimately, when we look at this market now, that very high-end market, it's extremely fragile. It's
very thin.
It's very, very thin. And when we get into the conversation and we sell luxury real estate, you said something very important. It's a very small amount of data to work off. It's very hard to draw conclusions from a couple of sales a year. 3
sales makes a large percentage difference. They're outlier markets.
Yeah.
And it was almost as if all this pre-construction inventory was being delivered for a resale market that did not exist.
Yeah.
It's eek.
Yeah.
I don't know how that's going to play out. I said, actually, I did an interview earlier this year, and I said that the Miami market is not a magic unicorn that will defy supply and demand fundamentals, and that was before Corona. So when it comes to the luxury condo space, the dominoes were in place. Corona is just sort of...
Yeah, and I think that's true when you look into this from an outside standpoint, and when you're actually looking from the inside out as well as we do, which is important because I know we've got everyone else looking in, and we're looking in to out. The realities of the market is that you cannot defy the laws of physics of economics.
Correct.
It's just there's no way around it. I don't care how special your mum tells you are. Everybody thinks their baby's the most beautiful.
Unless she's buying.
Unless she's buying. But it's true to say that there is a legitimate desire to live in South Florida.
Yes,
there's
absolutely.
a demand for it. But the price has to be right.
Absolutely. And we're seeing different segments, even in the luxury condo space, behave a bit differently. You and I talked about this. Where's like the safety purchase number? And you mentioned 2012.
Yeah,
and I agree.
Yeah.
And they're great. If you think of a building, a resale building in the condo market as like a stock, you can track its price per square foot. You can track unit types, and they move in curves. And no one knows exactly where the bottom or the top is. But if you're buying at a prime waterfront location in the bottom 20th percentile of the price curve, that's a good place to be.
Yeah.
And we're there.
Ray Dalio or any of the guys, Motley Fools, anybody who works in the other markets and the stock markets will tell you, you can't guarantee to buy at the bottom. You can't always guarantee to sell at the top. But if you allow for a margin of error, I think what we're talking about is knowing the numbers well enough to give you that margin of error. And ironically, when I was doing my figures using the software that we have, Condo Geeks, we're able to go through, and I looked at 2012 and thought, what is a safe point for this market? And it came to 2012. Some cases it could be 2013, but really that's like an insurance policy number. And now when I look at the movements up, if you're buying at 15, 16 figures, then not so much. But now what we're finding because of Corona and what I'm seeing is that there's a realization and there's more mobilization of negotiations happening within these deals. And that's why when we see some of these deals come through the pipeline and we see some big sales coming out, which we have done, they're not trading at what they first traded at. They're actually trading at pretty substantial discounts.
If they purchased within the last 5 years.
If they
Correct.
purchased in the last 5 years.
Correct.
So there is deals to be had.
Yeah, especially buying waterfront, oceanfront at a 2012 price right out of a big financial crisis. That's not a bad place to be.
Yeah.
I have no qualms recommending that. That's good.
And I agree. And it's not just about, obviously, the right numbers. People are looking at Miami, and I'm feeling it on the phone calls that I get. And Anna, you've agreed with me
1,000,000%.
that we feel the social tensions in other cities is palpable. You can sense their real need to move, and it's sad. It's sad in many, many ways. And I feel very bad for so many people who have spent their entire lives in other big cities, urban cores, and now they feel like
their life is upended.
Yeah.
They walk on the street, they feel tension, it feels different, it feels unsafe. No, we're very lucky here. Our daily quality of life, of course, besides curfews, restaurants closing earlier, you walk on the street, you feel safe. It's fine.
Yeah.
You don't feel that kind of grit or danger in the air.
Yeah.
And we're very lucky. And so one of the positive trends, right, that Corona is accelerating is net migration into Florida.
Yes.
In 2019, we were the largest recipients of immigration flow from other states.
And that brings us round to the other dynamic of the buyers coming through, which is that primary move.
Yes.
And that swings us to another side of the spectrum, which is the single family market,
Right.
Which again, Condo's doing one thing, houses doing another. I live in Coral Gables. And I went for a walk last night with my dog, and I'm walking around the area with my daughter in tow, and it feels like I'm oblivious to everything going on in the world around me.
It's a little utopia.
It's a little bit of slice of paradise, as someone told me, and I really feel it, and I can understand the pull. Now, with the relocations, the focus obviously is on being in a safe neighborhood. Very family-driven neighborhoods, so the best private schools. I live in Coral Gables. Coral Gables and Coconut Grove have been doing very well. Pinecrest has been doing pretty well. Even on the beach, when I look at the amount of single-family sales that have come through, and I'd love to hear your thoughts on this, because I have mine from my clients. What are you feeling?
No, 1,000,000%. The best performing market segments right now are $1 to $3 million single-family homes. Yeah. And in fact, in some areas, they've actually clocked in highest ever transaction volumes in June and July. And that's within the context of a broader market that was down 50% in those months in some areas. So that segment of 1 to 3 million homes was literally having the most sales ever, June and July. And the question is why, right? And it's a $1 to $3 million single family home checks two very important boxes. It's a necessary purchase. It's not a discretionary purchase. It's not a crash pad, cool, fancy condo. It's a place you live with your family. And in a pandemic, there was a survey that came out, Redfin, I think, put out. And right now, the number 1 and 2 criteria people looking for homes that they're looking for is outdoor space and room to work from home. And so those are all single family home characteristics. And so 1 to 3 million is a necessary purchase, end user. And also importantly, it caters to the investor class. This is something I talk a lot about too.
Yeah, let's talk about that.
Yeah, in this economic downturn, which we're very much in, the losses or the burden of the unemployment burden has been felt most heavily by people in the lowest end of the economic spectrum. The lower you go, I think it was 40% of job losses were people making under $40,000 a year. At the same time, the largesse of the Fed's very open monetary policy and the printing press has gone to boosting stocks and financial assets. Financial assets are owned by the investor class. And so while job losses are still being felt by lower earners, higher earners can work remotely. They have intellectual capital. They don't have to physically show up, and they're benefiting from the Fed's printing press. So they can make that purchase and move their family to a safer place, work from home, have outdoor space. So that's it. Those two main check boxes, need-based and investor class.
That's exactly what we're experiencing in these markets and in the Gables. I've been selling real estate in the Grove and Gables for over a decade, and we've been seeing record number of sales in neighborhoods like Gables Estates. We've been doing 13, 15, 20, 30, 35, $40 million sales and more in the last 6 months that we've never seen before. And I know that is a very small portion of the market. But when you're getting into the realm where we see, 26 sales this year compared to 17 the year before, it's a pretty massive uptick. It's significant. But it's more the dialogue that we're having on the phone. And I think it's important that when you're looking at these numbers and figures, it's important for me and us to explain when the phone goes, and I was saying this earlier on, the conversation is much the same. I need to move to South Florida. I want to be safe with my family. I've got to be in a good neighborhood. I've got to feel there's a sense of community. And I simply, cannot deal with Manhattan, Chicago, whatever city is, or their personal scenario that's happening. And I don't see any reason why that's going to slow up.
I don't either.
If anything, I mean, we're about to, it's August right now, it's end of August, and we're about to go into autumn in the rest of the country as kids go back to school. Days get shorter, gets darker, gets colder, and we're still dealing with the pandemic. Here, it's blue sky and sunshine,
Absolutely.
and it'll go on for the rest of the year.
And you know what? Habits change. So a lot of how we live, how we went to work, how we went to school, was based on constructs built pre-internet, like post-World War II, 20th century structures. And we could have virtualized and used technology more, but we didn't because habits were set. And if you don't have to change, often you don't. This has forced a change. And once habits change, they don't just go back. You could say, a few months from now, let's say, knock on wood, okay, there's no more corona. People aren't going to say, I'm going back to living how I did a year ago. No, they formed
look at
new
the
habits.
commercial behavior. Commercial behavior is a very good indicator of some future changes that we're going to see permanently.
Very much so.
And the commercial change in office space and how people are going into the office or really not going into the office now, working from home. We often were the case of, I wanted to move, but my kids were at school or my office was in the city that I lived in. Now it's like, well, I can work remotely. I don't have to be in the office. And, the kids aren't going back to school so imminently. So this is really changing it. And I think that I found it, I call it an existentialist awakening, where people looked very closely at their lives and said, honestly, this sucks.
Exactly.
It's not a good way to live my life.
Exactly.
And so they've questioned it. And now they've looked around, they've opened their eyes, they've had time to look up from looking down for so long and survey the horizon and figure, where do I want to drop my flag? And it seems from what we're seeing that Miami is a number one choice for people to drop their flag in.
1,000,000%. Great quality of life. And if you're working from home and you can work from home, why do you have to pay exorbitant state taxes, all of those things, when you can have a healthier lifestyle here?
Yeah.
That was happening before, and now it's accelerating.
That's why we're here. It's no coincidence that everyone in this room is actually from another country or somewhere else.
I grew up in New York City.
Yeah, there you go. And I grew up in London. So two big urban cores, cold weather in the winter.
I can't do it anymore.
We made the right swap. No, I couldn't go back either. So look, Anna, thank you for doing this video. It's been great. It's always good to chat with you. As always, click below, follow our Instagram, see our email if you want information. You know where to find us. And look, I always enjoy these chats. Stay tuned. We'll bring you more analytics. We bring this narrative forward because if you want to be the smartest guy in the room, you've got to make sure you surround yourself with the smartest people. And this is one of the smartest people in the room.
Thank you very much.
Thank you again.
Thank you for having me. Thanks,
Anna.